Hi, this is a new month on the 1st of July, and this is R.N. Bhaskar from BKBB, which is an acronym for Bhaskar Ki Business Baatein. We'll bring to you policy analysis, occasional short story, occasional conversation. But at 8:15 in the morning, right now, we bring you news behind the news. Just a reminder, please click the subscribe button if you have not clicked already. Click the like button if you like the program. We think you will. And tell all your friends about us. It helps us. Today I have with me my co-anchors, Katya. Welcome, Katya. And Anurag. Welcome, Anurag. And among the three of us, we'll be discussing three titles. All of them are significant. One is protests against arms suppliers to Israel from different countries have begun. The second is mixed signals on the Indian economy. And the third is US-India trade ties, discussions of them. And now we come to the digital economy. Okay, let's see the first story. The first story is interesting because of the headlines that you see. Norway has banned investments into two companies. KLP Pension, which is the largest fund in Norway, has refused to finance Oshkosh and Thyssen Krupp, the German company. They said we don't want to invest in these companies because they're big arms suppliers to Israel. Incidentally, Germany has also been accused of supplying chemical weapons to Saddam Hussein to attack Iran 38 years ago. And if that is not all, Israel has just made a request to America for a line of $17 billion worth of military equipment. So obviously, defense contractors are salivating. And countries like Norway and other human rights groups are agitated. In the UK, there was a huge protest against companies that were supplying F-35 components to Israel. Unfortunately, they had a setback where the courts allowed these companies to continue selling components to Israel. But the UK and Germany have a very checkered record of supporting the wrong wars and often using the wrong weapons to kill human beings. The war is getting messier, and America is now caught in a trap where it cannot break away from Israel, but knows that Israel is dragging its reputation also down the drain. Let's see what happens. But the war is turning uglier day by day, and the agitation across the Middle East and even the Western world is increasing. That takes me to the second story about big signals for the Indian economy. Katya could be happy.
So no signal is ever straight. So there is a lot of data which was released yesterday. Let's look at it. Indian industrial output, as expected, slowed down to 1.2% in May. Just want to give the perspective, it was around 2.6% in April. So it has slipped further. So what is very interesting, or rather unfortunate, is consumer goods growth is contracted a lot. It's 0.7% in May, and and it was around 6.2% earlier. So it's a huge drop, which means there's a huge sales glut which is happening, which is actually causing this problem. So it could be domestic, it could be exports as well. And then the other side, if you go, actually GST collections have gone. The last in April they hit a all-time high record. This time not all-time high, but it's still at around 2.2 lakh crore, which is actually, if you look at it on an annualized basis, it is around 16.4% growth. That's very, very interesting. Okay, and then at the same time, there is a third data as well, point as well. India's fiscal deficit also come down. So it could be also like GST counted as good news. It has come down, and it's 0.8% of the FY26 target. So, but this is actually not organic. A lot of people believe because of the record dividend that RBI has given to the government is what has bolstered finances. So if you see, sir, there is bad news in the economy. Even good news comes with a bad news rider. So, what do you think about it? GST collections are also growing up because we are expanding GST net all the time. It's not necessarily that transaction is growing. So, what do you think is the real picture here?
Katya, you're right. Signals are not very attractive, and even the good points that are made, that everyone talks about are actually bad points.
True.
GST is grown because of freebies given by the government,
Hmm.
and each freebie,
Hmm.
if the government gets 100 rupees, 12.5 at least, maybe 17 rupees goes back to the government as GST. So that's one. So GST is an indicator of how much money the government's pumped in, even though it has no money. And you're right, your fiscal deficit is low only because government has taken dividends from RBI and from all PSUs. PSUs have been giving record dividends to the government. So the government's
Right.
coffers are full.
Hmm.
As a result, GST looks good, deficit financing looks bad, looks controllable, but other signals. Yesterday, as you said, IIP fell, markets crashed, and the rupee also weakened. Yet you have the RBI saying, no, 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 everything will be okay. Well, that's unfortunate. You're right. Very important story, mixed signals is right. And let's see the third story, which is also very interesting, and that is about India US trade talks now around the digital economy.
Good
Anurag,
morning.
please.
Good morning. As India and US move closer to finalizing a major bilateral trade agreement, India is actively reviewing its digital economy policies, including the proposed digital competition bill, e-commerce regulations, and tax rules for foreign tech firms. These policy adjustments are being timed to align with US interest and to position India as a favorable destination for American tech investments. This is not the first time India has recalibrated its regulatory approach in response to foreign negotiations. For instance, policy drafts on EV were revised to accommodate potential investment from global companies such as Tesla. The current round of changes follows a similar pattern, with India recently moving to equalization levy on digital services to ease trade tensions and remain in line with international tax frameworks. Domestically, the digital economy is expanding rapidly and is projected to account for a significant share of national income within a few years. However, industry stakeholders have raised concerns about the broad criteria for designating dominant digital enterprises, regulatory overlaps, and compliance costs under the new digital competition bill. At the same time, reports show a sharp increase in cyber crimes, as covered on BKBB previously, including theft involving digital commodities and cryptocurrencies. The lack of regulation in the digital economy market has made it harder to recover stolen funds, highlighting gaps in the current policy frameworks. Despite the urgency of domestic issues, comprehensive policy reviews often gain momentum only when linked to international deals. Now, will India's digital policy reforms be sustained beyond the immediate pressure of foreign negotiations? Or will they continue to be reactive, driven by the next big bilateral opportunities? What's your take on this, sir?
You're right, Anurag. The talks with the USA are going to be difficult because the US is strong in financial services and wants to monopolize financial services in India. And if the US is in free reign, you can expect their nationalized banks, which are government owned, to slip even further. Already, private sector banks are taking a lead over the nationalized banks. That's one problem. The second problem, the US comes in with its digital technologies. The Indian government will lose its ability to control them. In any case, the government negotiators in the US have already said no, a categoric no, to any agricultural exports in the US to India. Well, finally, India is learning that agriculture is sensitive, unlike earlier, where the Commerce Minister signed away India's interest in milk to New Zealand and withdrew those once the protests began. Will it happen in the digital sector? I don't know. Digital sector is not as organized and as strong about such views as the agricultural sector is. Let's see what happens. Please remember the government already relaxed many of its norms for US companies. Look at the way Tesla's applications for Starlink were cleared overnight. The price of uh, what is spectrum was also reduced phenomenally. And now let us see what happens, because now regulating a giant is going to be very difficult. These discussions are going to be fraught with a lot of heartburn and even a lot of muscling around. Thanks. And thank you for watching. That ends our 3 titles, but we have some questions coming up. Before the questions, the same reminder, please click the subscribe button, please click the like button, and most important, tell your friends about us. And now we have the first question. Should India take a call on censuring all defense and business deals with Israel? The government won't do it. For one, for good reasons and bad, Israel has been very helpful in building up India's defense industry. Unlike America, which refused to part with technology to India, the only 2 countries that have parted with technology and have taught India to make things are Russia one and Israel two. Many of the arms manufacturing companies in India have Israeli collaborations. And even now, many of the companies are supplying their defense output to Israel. It's a relationship that has got so knotted up, the Indian government won't be able to do it. Let's take the second question, and the second question is: less industrial production, more GST collection could be due to more imports. Is this indicating a long-term economic change? Well, India was always importing itself. If you look at the trade gap, it's worsening and worsening. Imports are growing faster than exports. And while the government takes pride that imports declined, the imports declined little, exports declined more. And many of exports are also import dependent. The economy needs to rework itself, but your PLI schemes, the production linked schemes of the government, are also import intensive. So unless the government starts reworking its vision, you will have problems. And that takes me to one more question, and that is about the economy. Do you see stock markets taking a plunge, Katya?
So my guess is anybody's guess. Stock markets are behaving. It's an animal of its own. You cannot do it. But stock market has, there's a lot more at stake. Is all what I can say. There are like 9 IPOs which are coming. IPOs have rushed through. A lot of listings are happening, and all these IPOs and listings are at stake. A lot of SME IPOs, even big IPOs. If you see retail interest in IPOs is coming down, so it could be an indicator. But markets are flush with cash. Mutual funds still are holding. AMCs are still holding on to a lot of assets. Until then, we are okay. But there would be profit taking. There are a lot of doomsday people advising profit taking, but we do not know. Wars also don't seem to rattle stock markets anymore. They are tired of being rattled by every trade decision. So now they are stock markets are setting their own path. It's good news. It's also bad news. We'll see what will happen.
You bet. The markets are unpredictable, but so are government policies. And that makes the situation more chaotic than ever before. Anyway, that finishes our news behind the news for today. Have a great day ahead. And yes, we look forward to seeing you once again tomorrow morning. Have a great time.